Hello everyone, welcome to today's session. Let's get underway here. Market conditions continue to remain mildly bearish in a bull market, seeing a little bit of a retracement, kind of a mixed bag here, really across the board once again. And let's take a little bit of time and spend a little bit of time go over that right here. Sentiment. Pardon me, momentum. Let's start out with momentum. Seeing that momentum slide back inside of that kind of that non-trending mode right here, and we'll look at S&P 500. That's really the biggest factor is S&P 500 and some of those big cap names, those big cap tech names that are starting to weigh the market down just a little bit right here. Breadth, we're continually seeing that improving, and sentiment also seeing a little bit of a decline here as markets have been pulling back, but that is nothing too intense right here. The one of the things that we're going to start to want to keep an eye on, let's jump over, well, let's look at buy sell ratio right here. We're still seeing a really nice positive buy sell ratio. We're sitting at 3.15, well above 1, and so still seeing broad-based strength in terms of participation. And but again, because of it, the indices are weighted in most cases at S&P 500, some of the other ones as well, to where you've got the larger names in the index that have more control over the overall index. So you've got the Amazons, the Microsofts, the Nvidias that are pulling down S&P 500, but nothing too significant. This is a really normal looking counter trend. It's a normal looking counter trend because we're still in the momentum zone really across the board. We'll look at some of these indices and see if any are stronger or weaker, but we are working on just kind of that bounce. Sometimes they call this a dead cat bounce, when you get that fall off the table, you hit the floor and then you bounce up a little bit. Typically we'll retest that. Okay, so we will more than likely see a retest of S&P 500 back down to these levels, and that oftentimes will create a stronger support area if it can retest that and prove that it's going to have strength. If it can't prove that it's got strength and it retests that area and it fails and starts to slide back down through that, that's going to be really what we want to keep an eye on. If number one, we do get a retest, number two, if it doesn't hold, then we could start to see some additional weakness, particularly if we start to see some of the other indices roll over with that. Let's look at NASDAQ. NASDAQ is hovering right here. I should say NASDAQ 100. The triple Q's hovering right here at this 482 range, and found some support at that 475. But it really inside of this gap right here, you've got all of this action, and we had a bounce here. We're looking to move back up again. This is the weakest so far of the indices, just because we're seeing a lot of those technology names rolling over. We talked about Microsoft last week, and let's take a look here and see where that's been at. So you can see that Microsoft trade all the way back down to support, pulling back up, and a lot of these stocks, once we start breaking down through this momentum zone, this 236 Fibonacci level, it becomes harder for that stock or a market in this case to break back up above it. It just creates one more area of resistance, and that's what we're seeing on, well, in this case, just on Microsoft, but it did have a bit of a bounce right here, and so we'll see if we end up getting some follow through, or if we get resistance right here. You can see kind of that topping tail bar starting to develop now at that resistance. You get selling starts to come back in, the rally back up, or the short covering, shorter term trades, and then a possible retest here as well. That's really what I'd be watching for here in the next few days, to see if we do get selling into this rally right here, where we've got the S&P 500. Sorry about that. I had to mute that and cough for a minute. Where we have markets that are not creating new highs. We're running into some of these upper resistance areas now, and in this case, resistance here on S&P 500. And seasonality also, July and August, May historically has been kind of a downer month, and June, July sometimes back up again. We'll see what we get. Every market is slightly different. Every time is slightly different. All the conditions are slightly different. yet there are some similarities when it comes to price action and price activity. That's primarily what we want to be focusing on. And so right now it's watching the support levels on several of these indices. Dow really had some strength here, moving back up aggressively up into this range, that 410 on DIA, but it also now is back below that 236 area, so some resistance possibly for Dow. The real big high flyer right now is the Russell 2000. These are your small cap stocks. These are some of these more aggressive names, these biotech stocks that are really having some big moves. A lot of the finance stocks are also falling into these small cap, getting a decent rally, not huge, but up 1% today as well. So that theme is still continuing, where we've got small cap leading, large cap kind of quieting a little bit or pausing, technology, which is also retracing. And let's look at sectors to see which other sectors are in kind of that decision point zone. We've got basic materials, which, some of these have got these uptrends. They've made an attempt at the momentum zone, the 236 area, and are just retracing that. So what we want to see is if we get some of these stocks that are in this hold zone right now, or in this case sectors, or industries, or even individual stocks. It's the same process that we're following for each, but a retracement back down. Now we're watching to see if this area holds up. This uptrend is still holding based on this 6-month time frame. And so the structure of this trend now, it's not fantastic because we haven't made our way back up into this momentum zone. It's starting to weaken, but it can start to find some support still. As these start to fail, if we start to fail this 142 level on base materials, next stop is going to be that 50%, and that could start to get another retest. That's uptrend more than likely will still be in place, but the retest of that is what creates a lot of the volatility, just a lot of indecision. You're getting a lot of movement and rotation happening in really across the board, moving out of some names, moving into some names, moving out of some sectors, moving into others, this rotation that's happening. Consumer services, also, it's in this hold, but that's a decent looking retracement, still in momentum zone, still pulling back to a resistance area here that we want to see. We want to see it hold support. That could be the case here on consumer services. And telecom. Telecom is one that has been it's been weak really for the 6-month time frame. Is still in a downtrend, and that could also be one that's finding some support right here. So commodities, let's look at those as well while we're on track here with looking at some of these current market conditions. We've got gold. Gold is still in the momentum zone, shorter term retracement, but the last 2 or 3 days holding up right here. Gold, typically you're getting that move into gold when you're getting economic weakness or fear of economic weakness, and money going into gold. It's been a pretty decent uptrend here for the last couple of years. If we go out to this time frame, you can see we've just kind of been slugging our way along here. This has been a pretty long counter trend process for really from April till now currently. And if we look at some of these other sectors, we're seeing silver also getting a little bit of weakness right here. See if it can hold up at this current range, this $25, $26 range on silver. And then USO, which is oil, has been also showing some weakness here as well. That one also a decent retracement of this current uptrend, and continuing to get some overall weakness that could really turn things lower for oil. And remember that oil is a commodity. Commodities don't do anything. They don't earn anything. They don't, they simply are just it's simply a supply and demand driven price function. So when you have a commodity and you have the supply demand sideways moving price activity, it looks really, really sloppy, something like this. It's a little bit harder to trade, obviously, for momentum, but it's not impossible. But just remember our goal, what we're primarily focused on, we want to focus on companies that are growing, stocks that are moving higher. We're looking for stocks in the new buy range. Ideally, we're looking for stocks that have a high rank. Okay, this has got a high rank because it had a pretty big move back here, and some of these other names as well that are in that upper momentum zone. AMSC is a good example here on the 6-month time frame. It is in that computer technology space. Electronics has had a big uptrend, rallying here today. And those are going to be some of the names that we want to see if they can continually hold up right here, and earning, big earnings coming into a company like this as well, really across the board. We're also seeing weakness in NVIDIA. NVIDIA has really been the big, the stock in the last 18 months that everyone is still talking about. It has had some support right here now, that 116 range, moving back up into that 122 area, and looking like it maybe maybe stabilizing here and potentially continuing its overall uptrend. A 3-part counter trend. Oftentimes you will get this 3-part counter trend, 1, 2, 3. This creates a retest. Okay? It creates a retest. If it holds this area and starts to move back up again, that creates additional confirmation, additional proof that there is demand there and that there's enough demand to continue the overall buy the dip mentality. When you hear that phrase buy the dip, this is what that means. It's buying a pullback, or in our case, we want to wait for that confirmation. Just give us a little bit more, because it could start to roll back over. It doesn't have enough confirmation to really prove that it's beginning or continuing this overall uptrend. Nonetheless, it's certainly, we know the stock is getting a ton of orders. They're making a lot of money, but the stock price can definitely get ahead of that, and often does. And so it can still retrace. Now the market may be looking for another earnings report, a little bit more clarity on deciding, should we go all in back into NVIDIA, particularly after this run that it's had. This is a nice looking chart on the 1-year time frame, because you do have that 1-year time frame holding in that 236 area and creating some support right here. Okay, that's the overall structure that we want to see. We want to see trending, we want to see consolidation sideways, and then we want to see continuation of that trending. And during these phases where we go from red, or we go yellow to red, ideally we're sitting those out. Okay, we've either been stopped out or we've sold into the strength as we get some gains into one of those early trends. And so that was the case here with NVIDIA. Don't have any position in it currently, and we'll sit tight to wait to see if it does give a little bit more confirmation as well. It's getting a little bit long in the trend the last 2 years, but we've talked about this before. The earnings still may justify higher prices from here if it does continue to have earnings and continue to guide on those earnings moving forward. Remember that the stock price is nothing more than the present value of the future earnings of the company. Okay, or the future anticipated earnings of the company. It's always, because it's a lot of speculation. We're all buying a stock based on where we think it's going to go. Me and you, as well as large institutions, everybody's buying a stock based on where they think the price is going to go. And so oftentimes the earnings, everything we know about the stock now is already baked into the price. Any information that's known or anticipated, heavy hitters have made the decision. Okay, they know what the earnings have been. Okay, so now that's old news. Now we want to look to see where it's going in the future, and that's where price activity and price trend and demands and anticipation for that, we want to continue to follow those trends, because that's where the big institutional money is going. That's ultimately moving these trends. So right now you can see it's it's a little bit of a pause right here, but it's working its way back up again. Nothing to get too really excited about at this phase. I did want to look at Tesla and see, because it's had a decent little move here recently off this uptrend, and now it's holding in a 6-month time frame, holding right back to support. So if you're interested in looking at Tesla, these are now times to start to watch for those pullbacks and watch for it to hold momentum inside of that support zone, inside of that momentum zone, I should say, here. And I always like to draw this line. I don't know why I do it, but it's mostly just because I want you to recognize the part of the chart that we're really focusing on right now. All of this is important, but it's already happened. Okay, this is what's happening right now. We want to know where it's been. We want to know what the current trend is. But now, as far as action and be able to make a decision on it, we're really focused on this part of the price trend. So ideally, we want a confirmation bar similar to yesterday, on increasing volume over a prior day. Okay, so if you're looking at a volume chart down here at the bottom, you can get rid of that volume chart because sometimes it does kind of muck up everything here and make it harder to see the price activity. But it's also important to focus on. So in Tesla, because Tesla has really gotten beaten up here in the last year and a half, it doesn't have a real high rank. It's still working on getting that rank back. It's climbing, but this rank is a 12-month rank, and it's heavily weighted towards the most recent quarter, towards the most recent 3 months. So we probably are going to start to see Tesla strength improving. Whether or not that means it's a good buy or not, that's anybody's decision. That's anybody's guess. But in terms of looking at what we want to see, ideally we'd like to see a long-term trend up as well. But Tesla's an interesting stock led by an interesting character who's brilliant, and ultimately Tesla and things that are evolving and revolving around Tesla, especially AI. Tesla was really one of the biggest players in AI 5-6 years ago with the automation, self-driving cars. And so that technology is going to be spilling over into other areas as well. Not necessarily automotive, but it'll be interesting to see what they end up doing. I just thought I'd bring this one up because it is in the momentum zone. It does have a confirmation bar as of yesterday, and increasing volumes. It's moving back down a little bit now today, but we'll see where that ends up. Let's jump over, kind of still talking about big, long-term market perspective. Let's look at where we're at in this trend. Remember, we want to focus on two things. We know that we're in a bull market. We know that we're at the upper end of this bull market. This bull market rank is at 27. As I've said the last 3 or 4 or 5 months, 22, 23 was about where it got to back up in these. And this was a pretty aggressive move higher. So we're even higher than that in terms of the momentum of this current trend. It's been a really fantastic rally and still could certainly continue that way. But are we going to start to see some pause? Are we going to start to see some retracement back, into a deeper correction or counter trend? We don't know until we get there, but we also know that stocks don't go straight up and they don't go straight down, at least not forever. They can go straight up, but they don't last and they don't stay in those areas for a very long time. So now is the time. My point is, now is the time to make sure your portfolio is structured in a way that can manage the risk and the volatility of a retracement of some kind of a news item that maybe blows things up a little bit, or earnings come in bad. Now that we're really starting to get into earnings, maybe we see earnings are not so hot, or just the fact that we're getting tired in this market. A sector rotation, or a rotation out of some of those tech names back into the small cap names, is still constructively bullish because it's not money leaving the market. It's just rotating out of one group of stocks into another group of stocks. And that's ideally the way that we prefer to trade anyway, right? We want to be looking for stocks that are exiting a trend and then entering into a new trend. So anything we're looking for, adding into stocks as they're starting into that new trend. That is, so in terms of allocation, my current allocation is about 25% or less in equities. The rest is in cash. And as I've mentioned, I prefer cash only because it's paying well, 5.5%, 5%, 4.5%, and it doesn't move. There's no volatility in it. Most money market accounts, checking accounts, savings accounts, anything like that, it's fine. Cash is designed to be a holding period. It's not an investment. Okay, if you want an investment or something longer term, then maybe it's bonds or maybe it's something else. But there's nothing wrong with cash right now, particularly at the rate that it's paying. And then the allocation towards equities, entering into new stocks that go into new uptrends. The new trade that we had today was CGC, which is Canopy Growth. Or Canopy Growth, which is a cannabis stock. We're seeing some cannabis stocks now start to light up here just a little bit because you're getting some interest in the political strife, the political arena. Cannabis has such a it's so politically driven right now, still legalizing this or not legalizing that. Should you have recreational use? Should you have medical use? So there's a lot of volatility there. There's some potential opportunity for some upside. Obviously, risk is risk, and stop loss in this case is sitting right below this confirmation bar. So if it were to reverse back down, we know what the confirmation is, we know what the risk is that we're taking, so that if it does move back down to this level and ends up moving this direction, I don't want to say that we're wrong, but that the stock just didn't do what we would have anticipated to do, and that is demand starting here, a new trend. You've got lots of increasing volume. But the only caveat on this is it's not in that momentum zone. So it's a potential for an early trade or an early trend, but it's got some resistance. That's the trade-off sometimes of those earlier trends, is that they can run into some resistance. But if we get it right, then we're already up 80% by the time it even gets back up into this momentum zone. We'll see what happens here in this cannabis space. We also saw a couple ETFs that it started to show up in here as well. Let me see where it was. If it was right here, weed. It's a great symbol here as well. So weed is going to have more names than just the one. So for example, if we were to go out here and go to news and then go to holdings, this is going to show, and that's a few. That's maybe not the best example of stocks in that holding, and I just happened to just pull that one up, so I don't know the details on that one, but you're seeing some interest there nonetheless. Okay, a couple questions here and here. What do you use for cash positions? I think, as far as a cash position, any brokerage money market account for cash is fine. And that's primarily what I'm using, is just a cash account, or depending on the, they call it an ACH sweep, where your ability to move money back and forth out of a brokerage account. So, and typically that's linked to a checking account or a savings account in your bank. And if you have a sweep account and you're making a little bit more money in cash in your bank than you would be in your brokerage account, then that's fine too. Typically an ACH transfer is a couple, 2 or 3 days to actually be able to trade that money. But for the most part, just holding it in really any type of a cash instrument, money market, probably not like a checking. You're going to get the lowest interest rate on a checking account, but a money market account, even a savings type of account, but even typically just your broker money market account is going to work just fine for your cash positions. Let's jump over here on and still kind of talk about a big picture. Well, let's jump. Let's go. So let's talk about entry. Okay, we're still talking about this process of when you're going through. Let's talk about maybe the morning process just a little bit as you're looking for your trades, and we're focusing on what we're going to be doing. I typically will do two videos a day. One is just this YouTube video. It's in the morning. It's 4 or 5 minutes long. It's kind of the weather report of the market. And essentially, if you have just a quick glance, this directional alerts page, and seeing what are the conditions of the market right here, okay, and just that glance, that we're at the upper end of the trend, we've had a nice rally, there's still opportunity for that to the upside, but we also know that this rally is getting a little bit long, and we could get a retracement. In that retracement, so the fear of missing out is such a real emotion, and I don't want you to have that. I don't want you to feel like you're missing out on anything, because you're not. Particularly at the upper end of this range right here. If you haven't invested anything, you don't have any holdings at all right here, then it's just about what is my allocation going to be? What's my trading plan set for in terms of my position size? How am I managing this? Am I going to be going? And in this case, I'm using 2% to 2.5% on each position. So as we're going into a trade and we're saying, all right, let's take a look at CDE, okay, Coeur d'Alene Mining, and say, okay, if I were to buy that this morning, how many shares should I be buying based on my cash holding? Okay, so I could pull up my account and say, I know that I'm going to do 2% of whatever that number is, whatever my total balance is. I'm not going 2% of my cash amount. I'm going 2% of my portfolio of my entire amount that I've got available. If that's 50,000, if it's 10,000, if it's 5,000. it doesn't matter what the number is, your allocation number is still going to be based on the entire pie. Okay, so that when you do end up owning 2% of that stock, now you own 2% of your entire portfolio. So of 100,000, you're going to have $2,000 on that trade. And the risk in this case, if we look at CGC, and the risk on that one was sitting at, where did that one go? Oh, there it is, right in front of my face. Okay, so the risk on this is sitting at 2% here. I think we did, we did 250 shares on that with a stop at 730. Okay, so that puts us at, this is currently based on the current value. The opening price was a little bit better, but pretty close to that. So we want the two things, right? We want to say, what's the position size? The position size is going to be my number of shares. How many shares am I able to buy? Sorry, let me get my drawing guys right. The portfolio size of at risk, my $2,000. Okay, this can be the two pieces that we're controlling are the number of shares and the stop loss. So if I'm using 2%, then I've got to decide how many shares equals 2% of my 100,000. Well, you can just crunch that number in here and say, okay, well, I know that it's 250 shares. That's my position, my portfolio size at risk minus the stop loss. Now I want to add a stop loss in so that my total portfolio at risk is less than 0.3. Okay, less than 0.3. In most cases, that's about $300. Okay, with this approach, and that is, okay, if I'm wrong or if I get stopped out, I'm putting at risk 300. If you don't know that number, you need to know that number every single time you enter into a trade. Why? Because why not? Yeah, it's just gunslinging, it's just gambling, it's shooting from the hip. We want to add some exactness, particularly in the money management portion of it. So now our stop loss can be, really the ideal stop is, we still want to base it based on this portfolio at risk. If we can also get it at a technical level, that's also helpful. So in this case, we had a pretty big move yesterday, and if we place our stop loss just below this is that 618,740, we go at 730 right here. Good grief. I've got this new screen and this new microphone thing, and it's kind of, there we go. What ends up happening, you can't see it, is over here on the side, there's like a taskbar that GoToWebinar puts in. It's just right in my way of my drawing tool. Anyway, 730 on the stop. 730 puts us at 0.29. Okay, so this would be really maxed out. We don't have to take that full amount at risk. We can go less than that. Okay, we can either take a smaller number of shares, smaller position size, or a tighter stop loss. If I have a tighter stop loss, I run the risk of getting stopped out prematurely, but I'm also losing less money. So that's the trade-off, is if I just want to make sure, okay, I'm only willing to risk $150 on this trade, and I want a 2% at risk. Well, what kind of a stop can I have now? Is it 8? Is it 750? Is it $8? Okay, so at 775, 765. So 765 as a stop loss puts my risk at $200 or 0.2. This number is the number I need to be comfortable with. Okay, that's the number that I've got to say, I've got to be okay with this number at risk. The upside, we're going to let the upside take care of itself. We're going to let the market take care of the upside. We can't do anything. We can't push it higher. We can't pull it higher. We can't root for it to go higher. It's either going to go higher or it's going to stop us out. Okay, so we want to make sure that we're in control of the stop out portion of this trade every single time. It's not that hard. It takes us 35 seconds every morning to be able to pull this up. Literally, it's a minute-and-a-half process to be able to. The longer process is finding the trade that you want, the setup, that everything works. But in terms of confirmation bar, increased volume, stop loss, risk management, then you can use that calculator to be able to just, to really create some structure in the overall process so that it's like, how many shares should I buy? And then once you're in the trade, then you're not like just worried all the time to be like, oh, is it up a couple bucks? Is it down a couple bucks? It doesn't matter. It's going to either go up or down. We're in the trade. We've made the decision. We've got our stop loss. We know where our risk is. We're going to get stopped out more than half the time, okay, in a lot of cases, and that's okay. We can still make money. We want to, but we want to make sure that our risk is defined. Okay, I think it was Ed Sakota that said, if you can't take a small loss, prepare for the mother of all losses. Okay, if you can't take a small loss, that means you're holding on to something too long, and if you hold on to something too long, prepare for a big loss at some point. Okay, so make sure that those losses are tight. Make sure you know where they're at. Make sure the stop is established for each and every trade. And then it's about compounding into utilizing multiple stocks in a portfolio setting. I want multiple stocks. I want to them. I'm managing them individually, but I want multiple stocks because there may be a new stock that pops in there today or tomorrow, or a new trend, or even like that cannabis trade today. That's a new idea. That's a new trend that's developing or potentially developing, and we want to be able to participate in that. And how else would we be able to participate in that than seeing that? And if we were maxed out already with all of our holdings, we could say, and they would say, dang it, I can't get into that one because I'm already maxed out. We're able to keep things relatively conservative as well, okay, and able to get into new trends as they're developing. Don't have a lot of holdings here right now, but that's fine. That's really, again, it's about risk management and what the market is giving to us. We can't force anything on the market. It's going to present things to us, and we've got to do our best to be able to be involved in what the market is giving us. And sometimes that's fantastic, sometimes it's average, sometimes it's not so great. Okay, so we get what we get. We just want to make sure that our risk is always maintained. I'm going to end on that note. I appreciate everyone's time and effort, and we'll see you next time. Have a great day today.